Let's take it over to Alan Knuckman, the Chief Market Strategist at Paradigm. Good to see you, Alan. What's your trader talk for today?
Hello, Angie. It's the fall harvest season. Now, we planted some seeds for a stock comeback. We're close to filling that 4,400 gap in the S&P, and then it should go. Now, we had a stock stall here, but we're still less than 10% from the all-time forever top.
Tell us about your new trade from the pharmaceutical industry.
All right, today's stock, we're seeing some money flow, some options, leverage options buying in GSK. Pharma stock used to be called GlaxoSmithKline, but now they say they're GSK. It's trading about 37.5. It's 20% off the 2022 top. But like I said, we're seeing money flow into this, which is a very bullish option positioning.
Alan, how does that stock look in the charts? Because this is a stock that is getting some smart money buyers.
All right, let's talk about the stock. It's been between 34 and 38 in 2023. So a breakout of that range targets 42. Now, 36 is the midpoint of this action. It's also a spot to lean on because it's a 200-day moving average and the midpoint support. Now, in the big picture, this stock's been between 30 and 50 for the last 8 years or so. So 40 is an important midpoint magnet in the bigger range.
What's your call option strategy on this one?
All right, so the way to play, I'm looking at again an in the money option. The stock's trading about 37.50. A 33 call is in the money, about $4.50 in the money, trading for about $5.50 or so. So the expiration break even is only $1 higher, but I'm looking at a May option. The May 33 call has 7 full months of time for good things to happen, with the expiration break even just a little bit more than $1 away.
Alan, you've been optimistic the Fed is winding down with rate hikes. What are your trading day takeaways?
All right, let's talk trading takeaways. Trading takeaway number one, 98 is great. There's a 98% chance, according to the markets, that rates will be lower than they are now by the end of 2024. So we're at our terminal top, and that should be a positive that the stocks market can look forward. Number two, good, great debate. Good news is not bad. Millions and millions and millions of jobs have been created. We're not slowing down at all. The economy is so strong that we're probably going to be here for longer. We're not raising rates. We're probably going to stay where we are. But over time, they will come down. And the Fed has done its job. It's cut inflation in half. And number three, it's fact time for takeoff. Earnings season starts with the bank billions coming out here. And the S&P is up 5% in the last week. The VIX is down 20%, very positive signs. And we're only 8 or 9% off the all-time forever top. Now, in the picture that we see on the charts, we've been between 4,200 and 4,600 in the S&P now for a couple of months. A breakout of that range targets S&P 5,000. That's what I see.
Thanks so much, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.